Hey, for Lennar and home builders, the momentum really has picked up considerably in May. I think the Lennar results, which were dismal, they're on a November fiscal year. So for investors, you get an indication of the overall housing home building market. But for Lennar, March and April were weak, but a major pickup in May. So that will be good for upcoming net orders, home deliveries. Um, it's kind of interesting with COVID-19 that you would think that home building, being kind of a bricks and mortar industry, wouldn't have this much momentum like retail stores. But they have found a way to have virtual meetings and bring in serious buyers into their selling communities by appointment. And it has worked brilliantly for the industry. Lennar, of course, is one of the two largest home builders in the industry.
So should we interpret the stability of their business, the new orders that looked solid? They basically said next quarter they expect the same amount of new orders. At least that's what I saw. Is that a good thing? Is that good enough, basically, to justify how far they've come?
Yeah, so the baseline would be, if you're a typical analyst, you're saying, well, maybe you have pent up demand from what is typically the strong spring selling season happening in the current quarter. I would say that you have that working for Lennar and home builders, but we are seeing an amazing secular shift of millennial households and families moving from high-rise living across the country to the suburbs, to single-family homes, mostly to buy, some to rent. Oliver, we have had conversations about housing and the home building market for several years, and what we are seeing is unprecedented to the opportunity that home builders have over the next 2 to 3 years.
Right now, Ken, it doesn't seem like you're super bullish on the stock. You got a price target that's about $10 below where we are right now.
Yeah, so we're reevaluating the results. The conference call is at 11, and we'll assess where we are on this stock. We currently have a hold recommendation on Lennar, but we have strong buys on D.R. Horton, KB Homes, Meritage Home. We have buys on Taylor Morrison and MDC Holdings. So you can't pick the whole litter. Lennar is a good company. The street generally likes it, but in terms of growth on a relative basis, I like the names I have as we speak right now.
One of the points I think you have is really interesting from one of your latest notes on Lennar is that it's sensitive to the wealth effect. As you talk about, as you mentioned here, the nature of the price target range that Lennar operates within, move up near luxury communities. Should we expect that kind of trend for Lennar then, if the market keeps climbing, that Lennar's strength can build on itself based on what the actual market does?
Yeah, so it's a great question because most of the conversation has been the momentum of entry level or affordable homes. Move to near luxury, Oliver, a few weeks ago, Toll Brothers, which reported, that stock skyrocketed from 22 to the low 30s on good results. And then Lennar is kind of like more like Toll than the entry level categories. So the wealth effect from the stock market means more confidence, perhaps about your portfolio. Hopefully for many out there, you have job stability. And then, of course, you have phenomenally low mortgage rates for affordability. Put those together, someone looking to buy $1 million home who's just middle management can do it. So, that the stock market does have an impact on Lennar and Toll.
You also mentioned that if and when that scenario plays out, they could take business from competition. Who do they take it from? What's the other side of the Lennar trade?
I'm not sure. There's a pair trade here within the home builders. I would say the biggest risk is really to high-rise apartment living, which is residential REITs. We have pretty much taken all our buys off except two in the Sun Belt, MAA, and another one is in the Houston area. So, I really think office real estate in urban markets and residential REITs are more exposed than single family homes, whether they be the home builders or those who are renting homes, like Invitation Homes.